If you're starting out in day trading, there's one thing you need to know right away. The market is not a casino. And if you enter this game with a gambler's mentality, you'll be treated like one. That means sooner or later, you'll walk away with losses, frustration, and the feeling that the market is unfair. But the market isn't unfair. It's neutral. The one who usually isn't neutral is the trader, especially the beginner. Before anything else, let me remind you that the link to buy the book How to Day Trade for a Living by Andrew Aziz is in the description of this video and also pinned in the comments. This is the book we're summarizing here, chapter by chapter, based on the routine, strategies, and mindset of the 5% who succeed in day trading. And now you'll understand why so many people fail before they even know what they're doing. The truth is that about 90% of beginner traders lose money. Not because the market is difficult, but because they enter unprepared, driven by false promises of quick profits. They believe that clicking a few buttons is all it takes to change their lives. That expectation destroys careers before they even begin. Most behave like gamblers. They buy without a plan, sell on impulse, follow random tips, and ignore risk management, all based on emotion, intuition, or hope. But the market doesn't respond to emotion. It responds to logic, probability, and control. The professional trader understands that he's not there to be right every time. He's there to execute a plan. He knows that every trade carries risk, and the goal is to manage that risk with composure. It's not about being right. It's about following a statistically favorable strategy. Day after day, the market has no intention. It doesn't want to crush you or help you. It simply exists. And those who enter with urgency, fear, or greed lose control. And without control, there is no consistency. That's why so many go broke. Trading is a profession, and like any profession, it requires study, routine, patience, and discipline. The 5% who win aren't the smartest or the boldest. They are the most prepared, the most stable, and the most committed to the process. If you want to succeed in day trading, stop chasing luck and start building a method. That's the foundation of everything. Even before the market opens, professional traders are already at work. While many are still sleeping or deciding what they're going to do for the day, those who take day trading seriously have already defined their scenarios, adjusted their technical levels, and built a watch list based on objective criteria. Pre-market preparation is what separates the disciplined operator from the reactive trader. The professional trader starts by analyzing the pre-market movers, watching volume, volatility, and news. He doesn't pick stocks by instinct or randomness. He chooses because something stands out based on patterns he has studied and executed for a long time. With the list in hand, he marks important support and resistance levels, identifies points of interest, and defines possible entry triggers. This process is not about predicting what will happen, but about preparing clear responses for the different scenarios the market may present. This structure is what allows him to act with confidence when the market opens. Those who don't prepare react, and those who react usually make mistakes. The absence of a plan creates room for improvisation, haste, and decisions based on emotion. The result is always the same: trades out of context, impulsive entries, and disorganized exits. There's a big difference between waiting for a clear setup and chasing any opportunity. The prepared trader knows exactly what he's waiting for. He recognizes when the scenario aligns, and if it doesn't, he simply stays out. The amateur trader, on the other hand, forces entries, creates justifications, and tries to make the market fit into what he wants to see. Real planning is not a luxury. It's the foundation of consistency. The market open only reveals what you did before the bell rang. If you don't know what you're looking for, anything will look like a chance. And that's the fastest path to losing money. No strategy works if your mind is against you. In day trading, psychology is responsible for a large part of financial results. Knowing what to do is one thing. Being able to do it under pressure is something completely different. The fear of losing makes the trader hesitate on valid entries, exit too early, or abandon their own plan. On the other hand, greed makes them hold positions that should have already been closed or enter risky trades just to try to recover a previous loss. These two extremes distort judgment and break any operational logic. The difference between the trader who repeats mistakes and the one who evolves lies in the ability to recognize emotional triggers. The heat of the market activates automatic mental patterns that push us toward impulsive decisions. The only way to protect yourself from this is by creating clear rules and training the mind to execute those rules with discipline. Mental automation begins with routine. The professional does not decide in the heat of the moment. He already decided beforehand. His entry, stop, target, and the reason for the trade are all defined before clicking the button. He acts based on process, not on emotion, and that's what allows him to maintain consistency. Processing the trade is more important than clinging to the outcome. Winning on a poorly executed trade is just as dangerous as losing by luck. The focus needs to be on the quality of the decision, not on the amount of profit. Those who cling to results live in a cycle of frustration. Those who cling to the process build solidity. In the end, mastering the mind is not about eliminating emotions. It's about recognizing that they exist, understanding how they work, and preventing them from taking control. This requires practice, awareness, and above all, respect for the plan. The consistency you seek in results only begins when you find consistency in execution. One of the biggest mistakes beginner traders make is believing they need to master dozens of strategies to succeed. They enter an endless race in search of the perfect setup, the one that never fails, that gives constant entries and always brings profit. But that setup does not exist, and this constant search only creates frustration, confusion, and a false sense of progress. Andrew Aziz is clear about this. At the beginning of his career, he also fell into that trap. He spent months testing different strategies every day, trying to fit each market movement into a new logic. The result was the same as it is for most people. He lost money, lost confidence, and lost time. Until he understood that the problem wasn't the setup. It was the lack of focus. Professional traders don't operate with many strategies. In fact, most work with one or two well-defined ones, and the reason is simple. They are not looking for variety. They are looking for depth. Instead of trying to master everything, they choose a structure that fits their personality, available time, risk profile, and trading style. And then they repeat, adjust, study, and execute that same approach until it becomes almost automatic. That's the point most people ignore. Repetition is what transforms knowledge into skill. Excellence doesn't come from doing different things all the time. It comes from doing the same thing so many times that you recognize patterns more clearly, execute with more confidence, and adjust with more precision. When you repeat the same strategy every day, you start to notice nuances, small details, subtle signals that don't appear when you're constantly changing your approach. Changing setups every week is like changing languages with every new conversation. You never become fluent in any of them. The consequence is clear: slow decisions, hesitation on entry, lack of criteria to exit, and insecurity in critical moments. When a trader is always chasing a new strategy, they never develop mastery over any of them. Consistency comes from specialization. When you deeply understand a trade structure, you know what to expect from it in different contexts. You know when it's more likely to work, when it's better to avoid, and when to adjust the risk. This creates a cycle of operational confidence. And confidence in the market is everything. Fewer strategies mean fewer variables. Fewer variables mean fewer difficult decisions, and fewer difficult decisions mean more clarity, more agility, and more precision. This doesn't limit your capability. It strengthens your process. The pursuit of more setups usually comes from an impatient mind. The trader feels they need to be trading all the time. But trading more doesn't mean earning more. Often, it means losing more frequently. The professional trader knows that they don't need many opportunities. They just need a few good ones. And to take full advantage of them, they need to be sharp, calm, and familiar with what they're doing. Repetition is one of the greatest performance multipliers in day trading. The more you repeat, the more you understand. The more you understand, the better you execute. And the better you execute, the more consistent you become. That is the path. It's not glamorous. It's not fast. but it works. Mastering the basics with excellence is infinitely more profitable than knowing the advanced superficially. The traders in the top 5% don't know everything, but what they know, they do better than anyone else. The way you handle loss says everything about the kind of trader you are. While the beginner sees the stop as a failure, the professional sees the stop as an essential part of the game. The difference between the two is not in how often they win, but in how they lose. In day trading, losing is part of the process. No strategy has a 100% success rate. No trader, no matter how skilled, escapes stops. And what separates the 5% who win from the 95% who fall behind is how they handle those small defeats. The mature trader does not avoid the stop. He respects it because he knows that without it, risk becomes uncontrollable. Andrew Aziz clearly shows that the main purpose of the stop is not to avoid loss. It is to prevent a small loss from turning into an emotional and financial disaster. The stop is your predefined limit of exposure. It is your way of saying to the market, I accept losing this, but nothing beyond that. It protects not only your capital, but also your mental clarity. The beginner often enters a trade with the expectation of profit, but without a clear exit plan in case things don't work out. When the price moves against them, they hesitate, hold the position longer than they should, hope for a reversal that never comes, and turn a small controlled loss into a large loss. And when that happens, the problem is not just financial, it's psychological. From that moment on, the trader starts operating with fear. They begin to exit too early, avoid valid new entries, try to compensate with overtrading, or simply freeze. What was supposed to be a technical and calculated loss becomes an emotional collapse. All of this could have been avoided with a simple, well-placed and respected stop. The stop is not a punishment, it is a shield. It exists to keep you alive in the market, even on days when nothing works. It ensures that a string of mistakes or a failed trade does not destroy weeks or months of progress. And more than that, it teaches. Every stop brings a learning opportunity, a chance to review, understand what didn't work, and adjust the plan. Accepting. The stop is accepting that control lies in the process, not the result. The anti-fragile trader does not seek to avoid loss at all costs. He seeks to lose small, consistently, to be present and prepared when the market offers a real profit opportunity. I lose small, win big. This is the mindset that sustains a solid and lasting growth curve. When risk is under control, profit is no longer a matter of urgency, but becomes a consequence. The trader does not need to force anything. He just executes, knowing that in the long run, proper risk management always wins. Respecting the stop is respecting the plan itself. And whoever does not respect the plan will sooner or later be forced to respect the loss. Much is said about how to find good trades, but little is said about how to survive the market. The truth is, it's not the trader who gets it right most often who wins. It's the trader who best protects their capital. Real profit is not only in the trades that work. It starts earlier in how you manage the risk of each trade. Andrew Aziz makes it clear that risk management is not a detail. It is the backbone of any serious trading system. It is the only thing you can truly control in an environment of uncertainty. You do not control the market. You do not control whether the trade will work or not. But you can always control how much you are willing to lose. Every trade must begin with that number defined. Before thinking about how much you want to earn, think about how much you are willing to lose. This completely changes your relationship with the market. A trader who defines risk before entry does not trade with fear. They trade with structure. They know that even if the trade does not work, the damage is already limited. That limit is not emotional, it is technical. It is based on the logic of the chart, the volatility of the asset, and the size of the position. Position sizing is the tool that connects risk to the size of your account. You cannot simply trade 500 shares just because. You must adjust the lot to the risk of the trade and your capital protection plan. In the book, Aziz presents the simple rule that guides professional traders. Never risk more than a small percentage of your account on a single trade. This means that even if you go through a losing streak, your account stays alive. You still have room to trade tomorrow, and that, in the long run, is what matters most. Without risk management, profit becomes an illusion. A single mistake can erase weeks of gains. One bad day trading out of control can cost you your presence in the market, and if you're out, there's no more chance to recover. The game is over. Managing risk also preserves your emotional stability. Knowing that your loss is controlled prevents panic, haste, and impulsive decisions. When you trade within clear limits, it is easier to stay focused on the process. You are not trading to survive. You are trading to grow with consistency. The invisible profit is the one you don't see on the screen but feel in your account over time. It is what you avoid losing by being disciplined. It is what you preserve by stopping at the right time. It is what ensures you stay in the game until the good opportunities appear. Controlling risk does not mean trading with fear. It means trading with intelligence. When risk is controlled, profit becomes sustainable. And that is what separates the impulsive trader from the professional trader. In day trading, every second matters. And when the market is moving, there's no room for indecision, slowness, or disorganization. The difference between a well-executed trade and a costly mistake may lie in technical details that many ignore. That is why the tools you use are a fundamental part of your performance. Andrew Aziz is clear about this. A professional trader not only understands the market, he also masters his platform, understands its layout, and operates in a workspace. Designed for efficiency, nothing there is random. Everything has a reason, a function, and an order. The trading platform is your primary execution tool. It must be fast, reliable, and adapted to your trading style. Having a clean interface with organized charts, properly placed buttons, and configured shortcuts allows for quick and precise decisions even under pressure. When the market is offering an opportunity, you cannot afford to waste time trying. To remember where the sell button is, charts should also not be cluttered with too many indicators. Aziz recommends using simple but useful elements, such as moving averages and VWAP. These indicators are not meant to predict the future, but to contextualize price and offer decision zones based on volume and trend. When used correctly, they help filter noise and strengthen confidence in well-tested setups. Keyboard shortcuts, or hotkeys, are one of the secret weapons of the fastest traders. They reduce execution time and eliminate unnecessary mouse movements. A trader who has to click through several screens to enter or exit a trade loses time, energy, and often money. A trader who executes with 2 or 3 well-trained commands gains time, focus, and control. In addition, tools such as stock scanners and programmed alerts optimize asset selection before the open and throughout the day. You do not need to look at 100 charts at once. Just program the right criteria and let the system bring you the stocks that actually match your setup. This eliminates decision overload and reduces mental fatigue. Another powerful tool is market replay. Reviewing the trading day, studying your own entries, and calmly analyzing the movements is one of the most effective ways to accelerate your learning. Many traders want to learn only from the live market, but they forget that it is through review that mistakes are corrected, patterns are identified, and good decisions are reinforced. A professional setup is not just aesthetically pleasing, it is functional. It helps the trader stay focused on what matters. It reduces friction. It eliminates distractions. And most importantly, it creates a trading environment where the mind can operate with clarity. In the long run, this translates into fewer mistakes, more confidence, and consistent results. Investing in tools is not a luxury, it is preparation. A trader who takes the market seriously treats their workspace the same way a surgeon treats the operating room. Everything must be in place. Everything must work. Because when the right moment comes, there is no time for improvisation, only for execution. Few habits are as underestimated by beginner traders as journaling. Recording your own trades may seem like a simple, almost bureaucratic task, but it is precisely this habit that separates the trader who repeats the same mistakes from the one who evolves consistently. In the market, you cannot improve what you do not measure. And if you are not documenting your results, You're merely accumulating experience without learning. Andrew Aziz emphasizes this point. A trading journal is the most honest mirror there is. It does not care about your expectations. It does not distort your results. It does not cover up your mistakes. It shows exactly what you did, how you did it, and what happened afterward. By reviewing your records, you come across behavioral patterns that the chart alone does not reveal. Journaling starts with the basics: date, stock, time, type of strategy, used, entry point, stop, target, final result. But the true value lies in the subjective details. What were you thinking at that moment? What was your emotional state? Did you follow the plan? Did you enter before the signal? Did you exit out of fear? These notes reveal more about you than about the market, and that is what matters most. Over time, this record becomes a goldmine. You start identifying which strategies work best for you, which times are more productive, and when you tend to make impulsive mistakes. This allows for fine-tuning your plan and making smarter decisions in the future. It is a continuous process of self-assessment. The journal also helps to build accountability. When you know that you will have to write about each trade you made, you start thinking twice before acting on impulse. It creates a sense of commitment to execution because everything you do will be analyzed later without the excuse of the heat of the moment. This drastically reduces repeated mistakes. Aziz also points out that journaling accelerates learning. Many traders take years to understand their weaknesses simply because they do not track their own journey. They rely only on memory or their account balance. The problem is that memory fails, and the balance does not always reflect the quality of decisions. Sometimes you make money trading poorly, and that masks serious flaws. The journal reveals this clearly, but additionally, journaling strengthens confidence. Seeing your own progress over time, recognizing that you are making fewer mistakes, respecting the plan more, gaining consistency, is a powerful motivation. The journal shows that even on bad days, there is progress, and that perception sustains the trader through difficult periods. In the end, keeping a trading journal is not an obligation. It is a privilege for those who take their development seriously. It is not just about recording numbers. It is about building a story. Your story as a trader. And the more transparent that story is, the stronger the path toward consistency will be. Before trading with real money, you need to prove to yourself that you can follow a plan. And it is not in the heat of the real market that you learn this. It is in the simulator. This tool, often seen as a toy by beginners, is actually the training ground where winning traders are made. Andrew Aziz is clear. Trading in simulation is not optional. It is necessary. It does not matter how much you have read, studied, or watched videos. The only way to train execution, develop discipline, and build confidence is by operating in an environment as close to reality as possible, but without financial risk. The Hata simulator offers exactly that, but there is a fundamental difference between real training and just playing around. Many use the simulator like a video game. They test random setups, increase position size without criteria, ignore rules, and record nothing. This kind of practice does not build skill. It builds illusion. That is why so many people do well in simulation, but blow up their accounts in real trading. For the simulator to work as it should, it must be taken seriously. You must trade as if you were putting real money on the line. With risk management, a defined trade plan, clear goals, and above all, respect for the rules you intend to follow in your real account. That is how consistency is developed. That is how true confidence is built. Another important point is that the simulator allows you to make mistakes without financial consequences. And those mistakes are valuable. They reveal where you are emotionally vulnerable, where your strategy is weak, and where your market reading needs adjustment. It is there that you sharpen your vision, adjust your approach, and correct destructive patterns. Aziz recommends that the traders stay in the simulator as long as necessary until they prove, with data, that they are ready for the next level. This means showing consistent results for weeks, with emotional control and faithful execution of the plan. The rush to move to real trading is what destroys accounts and fuels frustration. Training also serves as maintenance. Even experienced traders return to the simulator when they want to test new strategies or rebuild confidence after a losing streak. There is no shame in training. On the contrary, the simulator is the safest space to grow. Taking simulation seriously is a sign of maturity. It is what separates someone who is just experimenting from the trader who is truly preparing to live off the market. Those who do not respect training are not ready for the real arena. Those who do enter with more preparation, more control, and much greater chances of surviving and thriving. Every trader at some point will face a bad day. It does not matter how much you study, how well you prepare, or how precisely you execute your strategy. There will be days when the market simply does not cooperate, or when you sabotage yourself. What defines your journey is not avoiding these days, but how you respond when they happen. Andrew Aziz teaches that maturity in trading appears in the decisions you make after a string of losses. While the beginner enters a state of panic or compensation, trying to recover everything quickly, the professional trader steps back, observes, and reorganizes. He understands that a bad day is part of the process and that it is precisely in those moments when self-control is most necessary. One of the biggest dangers is emotional overtrading. After taking several stops in a row, many try to trade more to erase the losses, driven by the anxiety to get back in the green. But that usually only makes things worse. When you trade to take revenge on the market or to relieve frustration, you are abandoning your plan and handing over control to your emotions. The best response to a bad day is to pause. Stop trading, review what happened, and reflect calmly. Did you follow your plan? Were the losses normal within controlled risk? Or was there a behavioral deviation? Was it a tough day in the market or an emotional breakdown? These questions need to be answered with honesty. The goal is not to find someone to blame, but to identify patterns and act responsibly. Aziz emphasizes that it is not just about protecting your account, but your mind. A poorly managed bad day does not only affect your balance, it affects your confidence. And shaken confidence leads to hesitation, fear of trading, and loss of rhythm. That is why recovering emotional balance is just as important as recovering capital. And that recovery begins with analysis, not with urgency. It is essential to understand that consistency in trading does not come from the absence of failure, but from the ability to recover from it. The traders who build long careers are those who know how to stop when needed, adjust the plan with humility, and return to the market with clarity. They do not deny the mistake. They correct it and move forward. Stepping back is not a sign of weakness. It is a sign of intelligence. In a market that will be open tomorrow, preserving your ability to trade is more important than trying to save. Today's results. Profits will come, but only to those who are whole enough to take advantage of them. Having a personal protocol to deal with bad days is part of the plan. Knowing when to stop, how to review, how to recover. This prevents impulsive decisions and protects your long-term journey. The professional trader is not defined by a single day. He is defined by the consistency with which he respects his own process. If you want to be among those who succeed, you must accept that the strength of a trader does not lie in trading without mistakes, but in the ability to recover with intelligence, resilience, and discipline. There is an invisible line that separates those who are merely experimenting with the market from those who truly decide to make a living from it. This line is not drawn by technical knowledge or the amount of money in the bank. It is drawn by identity. Are you a trader or just someone playing around with trading? Andrew Aziz states that a professional trader is not defined solely by trading every day, but by the way they approach the market. It is a matter of posture, responsibility, and routine. The tourist shows up, observes, takes chances, gets excited with quick profits, and panics at losses. The trader, on the other hand, follows a plan, respects the process, and makes decisions based on structure, not emotion. The true trader builds a routine with discipline. They wake up early, analyze the market, prepare their watch list, define technical levels, and enter the session with a clear strategy. They behave like someone executing a business plan, not gambling in a casino. The tourist does the opposite. They arrive unprepared, trade impulsively, change their mind mid-trade, ignore limits, and end the day trying to figure out why they lost money. This difference in mindset has direct consequences on results. The tourist does not evolve because They repeat the same mistakes. They do not track their progress, do not record their trades, do not review their performance. The true trader treats their performance seriously. They document, evaluate, correct, and strive to improve a little every day. Another trait that defines a professional trader is the commitment to continuous improvement. They study, read books, analyze their wins and losses, participate in serious communities, share experiences, and learn from others. They know that growth is part of the game. The tourist, on the other hand, wants everything fast. They look for shortcuts, miracle strategies, and results without effort. But in the market, as in life, shortcuts almost always lead to failure, assuming the identity of a trader means building a solid foundation. This includes taking care of the mind, the body, and the environment in which one operates. Sleeping well, staying focused, eating mindfully, and trading in an organized space are all part of performance. The trader understands that all of this directly affects their decision-making ability. The tourist does not perceive these connections and ends up trading in a constant state of distraction and anxiety. In the end, being a trader is not about being right all the time. It is about acting right, with consistency. It is about following the plan even when the result does not come. It is about knowing when to stop, review, learn, and return. It is about commitment to the journey. The question is simple, but powerful. Are you in the market to try your luck or to build a career? Do you show up each day to trade like a professional, or are you still behaving like a tourist? The answer lies in your actions, and your actions define your results. In trading, every decision matters, and some decisions are worth more than others. They determine not only the outcome of a single day, but the direction of an entire journey. If you have made it this far, you already understand that the market does not reward impulses, shortcuts, or improvisation. It rewards preparation, patience, execution, and constant evolution. And all of this begins with a choice to keep doing things the usual way or to take the next step with awareness. Andrew Aziz shows that there is no magic formula, but there is a path, a process that has been tested, refined, and followed by thousands of traders around the world. This process is not easy nor fast, but it is clear. And if you decide to follow it with seriousness, the results will come. Not overnight, but in a solid, reliable, and growing way. You can keep chasing new setups, jumping from one strategy to another, trading based on emotion, without a plan, without control, and without direction. Or you can, starting today, take control of your development. Choose to trade with a method, record your trades, respect risk, take care of your mind. Practice before risking, and build calmly and clearly the identity of a professional trader. What separates the winning 5% from the rest is not luck. It is a decision, a daily decision to respect the process, a decision to act responsibly even when self-sabotage feels easier, a decision to learn, adjust, and move forward. Today, that decision is in your hands. If you want to keep receiving content like this based on real foundations and focused on consistency, subscribe to the channel now. Turn on notifications so you don't miss an episode. And if you want to dive deeper into the full method that inspired this entire series, the book, How to Day Trade for a Living, by Andrew Aziz, is available for you in the description and also in the pinned comment. Your next trade starts with what you decide now. Let that decision be conscious, firm, and professional. Because the market is always ready, the question is, are you?